And we're back to this particular episode of the Assignment of Benefits podcast. In this episode, we're going to be talking about consumer protection, which is a really huge topic in Florida, but also in other states across the country. And I have a consumer protection advocate on this particular episode, Tirzah Duren. Welcome to the Assignment of Benefits podcast.
Thank you for having me.
Tirza, we start all of these podcasts by allowing our guests an opportunity for a little bit of an elevator pitch. Tirza Duren, who are you? What is it that you do?
I am Tirzah Duren. I'm the Vice President of Policy and Research at the American Consumer Institute, where we work to maximize consumer welfare through better informed public policies and agencies' decisions. My background is really kind of focused on the social science side of things. I have a background in anthropology, and I did my master's in international studies. So I really come to the topic of consumer welfare through a very holistic lens, but also a person first lens, which I think really lends itself towards these types of policies and making sure that the values and the opportunities of individual people are respected in the marketplace. And at ACI, we just call that maximizing consumer welfare.
I love it. I love it. And we're going to go deep into that particular topic. Before we start, anthropology and archaeology, I always get those two confused. Which one digs?
So interesting. It's fingers and thumbs a bit. So archaeology is the ones that dig, and then it's a subfield of anthropology. And so you have you have forensic, linguistic, cultural, applied, and then archaeology, which are all the fields. Which, not to say or create too much of a detour, but I did do that out in Croatia for a bit, and I decided it was not for me.
Okay. Well, so now my audience has already gotten some value from this particular. We know the difference between archaeology and anthropology. So thank you for that.
Of course.
So, um, consumer protection, consumer advocacy groups. There's a few of them that exist, and a bunch of them that are very active in the insurance sphere. What's different around how the American Consumer Institute kind of functions? How is ACI different from other consumer advocacy groups? Why did we need another one?
So, the American Consumer Institute, or ACI, which is probably how I'll be referring to it, was founded by Steve Posiak, who is an economist by training. And what he noticed is while, as you mentioned, there are a lot of different consumer advocacy groups or people who claim to support consumer welfare, what was really lacking is a consistent definition of what is consumer welfare. And a lot of times in policy or any kind of academic research, it's really important to define our terms. And what he noticed is that the term consumer welfare could be kind of co-opted by different special interest groups or different political agendas and
Mhm.
really be a stand-in or a plug-in for whatever the person speaking really wanted it to be. And so he started ACI so that we could really be a well-reasoned and empirically based voice for consumers.
Yep. So, you talked about how it focuses on empirical analysis over political views. So you do try to stay non-politically motivated. And, and in my experience, I get the sense that a lot of consumer advocacy groups are politically motivated. Like you could almost guess what their stance is going to be on any topic, even outside of like consumer related issues. Um, why is that important?
So it's important because, I mean, if we want to look at just the political landscape that we have in right now. With any ideology, any type of perspective, some parts of it have good impacts for consumers, some parts of it have bad impacts for consumers. And so when I mentioned previously that we really try to focus on empirically based consumer welfare analysis, we really build off the concept of consumer welfare as it's understood in economics. So in economics, you have the kind of matrix where it's the cost and then the supply and the curve. And so really what that does from a high level approach is it looks at what are consumers willing to pay, what are suppliers able to supply it at, and then the gap between those two is what we refer to as consumer welfare. So consumer welfare does have a huge emphasis on price, but it's not just price. So at ACI, we also kind of build upon that, the economic matrix, and we look at access, the access to goods to service and services, quality and innovation, which are kind of paired together. And what I think is most unique about us, but also really important, is we really try to approach our analysis from a respect for informed consumer consent. And so by taking these things together, we can
Mm,
come up with very consistent, neutral analysis that also respects and understands, and maybe this is my anthropology days, but there are differences between consumers. The wants and needs and the values of what they have aren't uniform. And so really respecting that choice helps us create a reasoned analysis that acknowledges the differences of between people.
yeah. And thank you for not dragging the whiteboard out and doing some actual math here
Oh, yeah, no.
and blowing up our brains. But this I'm trying to tie this to a topic that I think the audience would definitively understand would be like health,
Hmm.
right? Health and wealth. Where when people think of wealth, they think of money. And I always bring up the topic like, well, if you have money, you, a lot of folks might consider you wealthy, but let's say you have a bad heart and your cardiovascular system's a mess and you're massively out of shape. Are you really wealthy? Right? Like you have the money, but like your physical condition cannot doesn't is not gonna the money part's not gonna matter if your physical condition is atrocious. And when we sat down in Orlando at the Florida Chamber Insurance Summit, that was the conversation we had. And I was very surprised because most consumer advocacy groups do focus on price. Like for them, the price of insurance is a massive gauge in terms of whether the consumer is benefiting or not. And I think that your economic analysis, I think, is an incredibly important framework to judge whether the price might be low or the price might be high. But if the consumer can't get access to the type of insurance that they need, it almost doesn't matter what the price is. We got to start with kind of fundamental values around that. And so can you go into like why were you at an insurance conference? Like why it's obviously a topic that matters to consumers, but how does the ACI how do they kind of create how do they overlay their framework on top of the mess that is like the insurance marketplace?
Yes, so ACI, we work on a wide range of
Yep.
issues ranging from tech, healthcare, which we've kind of mentioned, energy, and of course insurance, which is how we met. And when ACI looks at any type of public policy proposal in any industry, we're looking at it through those main four lenses. But what we see in insurance, and we also it's a similar pattern that plays out in a lot of different industries. The one that most comes to mind is short-term lending. But we look at these things like rates, right? We'll call it the insurance rate. It can be the interest rate, what have you. But the rate itself actually contains a whole lot of information. And the information contained in that is the inherent risk. If something goes wrong, what is the insurance company looking to pay? What is the probability of something going wrong? Um, etc. And we were
Hmm.
at like a property insurance conference, and so that's a whole other thing. And it was Florida, so you can imagine the types of risks that the insurance companies
Right.
that are concerned
Yep.
about. And so we can see kind of proposals where the only things, the like very myopic focus that regulators have is on the cost of the premium or on the cost of the interest rate when you're accessing credit. But when you ignore what is contained in the cost, it's really easy to create a system that makes offering those goods and services unaffordable. And if you have it unaffordable, then you have these companies pulling out and nobody has access. And if you don't have access, then I agree, like there's nothing, the price of it doesn't matter because it's not an available product and service.
You
And so,
you you provided an awesome example that I think the
yeah.
audience can I hope they can appreciate is there's been talk about capping interest rates.
Yes.
right? And I was very surprised as a consumer advocate that you were like, well, we're against that for the appropriate economic reasons, which is, well, then people who are in that upper strata of risk that I don't want to say deserve a higher interest rate. I don't know what the appropriate term is, but their risk is reflected in a higher interest rate. If you cap the interest rate, those folks are just completely lose access to credit. And what you were suggesting is the same thing happens with price in insurance. And if you unusually cheapen the price, you're going to have long-term ramifications that ultimately harm the consumer.
Yeah, exactly. And you can see this play out when we're talking about different junk fee proposals. And of course, that's a whole mess because junk
Yep.
fees encompass some things that are truly junk fees. Some of them are just prices for service. So there's no real good definition. But to really reiterate the thing that we're talking about with the rates is that if the regulation doesn't consider the information that is contained in that risk, and it's not necessarily if someone deserves a higher interest rate or deserves a lower interest rate. It's not necessarily what someone deserves. It's just the practical reality of what the risk to lending
Mhm.
to a certain individual or, entails. And so if you have the goal of protecting consumer welfare by only looking at price, then you risk really cutting the access to those goods and services. And that's a huge component of consumer welfare that we at ACI really look at.
Yeah, and I think we're seeing it where we are seeing it play out in the insurance marketplaces. Um, I think Florida is the natural case, but I see California as like the experiment where we're now seeing this aggressively in real time. And Tirzah, this has been my frustration with consumer groups over the past decade and a half. I've watched what's happened in California. It was so predictable that we were going to get to this crisis point because what you would see is first the state of California had their one of their I don't know if it's an amendment, it's something the state voted for that basically said if you have an average rate increase of 7% or higher, it goes for a public debate. And worse, the insurance company that asked for that 7 or plus percent rate increase has to fund the advocacy against that rate increase, was just like mind blowing. So what you started to see is year after year, these insurance companies needing more than 7, but not wanting to go through the public debate around it, would always go at 6.9% average rate increase. They'd basically reverse engineer it. But what I saw was then consumer advocacy groups coming in and essentially saying, well, we don't even want to give you 6.9. We want something less than that. So there would still be this battle, and you could almost see it playing out like all California needs is a few wildfires with massive losses, and the carriers aren't going to ask for 6.9. They're going to need 69 or 100% rate increases to catch up the whole way. And that's got to be part of the consumer wellness aspect of it. Like, that's like a system shock where all of a sudden they're getting 25, 50% rate increase and they're not budgeted for that. Like they're assuming nice, slow, stable, incremental. Can you talk about market stability and how important that is to consumer wellness? Because we consumers, we don't do well with price shocks.
Yes. So we've done a lot of interesting work specifically talking about the increased risk from wildfires in California. And you do see some insurance companies either looking to or wanting to pull out of the state simply because it's not affordable. And that's something that I think it's really important, and ACI plays a really unique role when we understand the goals, right? The goal is to make insurance affordable. But the way to make insurance affordable is step one, to truly understand the markets and understand what these insurance policies and rates really are. And once you understand that, then you understand that arbitrarily setting a cap isn't going to address any of the stuff going on below it, which is the reason why rates increase. So if you want to actually lower premiums and make coverage more affordable, then the way to do that is through mitigation. And wildfires are one way. And I'm not an environmental protection person, or not protection, what's the ecologist, or I'm not a wildlife manager person. But I think you don't need to be one to know that the way the wildfire situation has been handled, specifically in the Pacific Northwest, where you have these huge fires every year, creates this increased risk for insurance. And so what we really need is we need to mitigate race or mitigate risk
Yeah.
as opposed to just placing arbitrary caps on the insurance marketplace.
Yeah.
Because at the end of the day, a marketplace is a marketplace. The companies have to be able to make money. And if they don't, then they're not going to be providing their services. And to make it all full circle, consumers are harmed if they can't access the services.
Yeah, I mean, it's the one lever we actually have when I talk about affordability is we know how to reduce risk, right? In California, it could be, proactive burning, right? Thinning the forest, which unfortunately creates a political dynamic as well, because there are folks that are like, no, no, you got to leave it alone. But we now have hundreds of years of experience that say when you don't thin out the fuel, you're just you're just building up a powder keg that's going to turn into a massive catastrophic wildfire that just is out of control and just destroys everything in its path. In Florida in particular, we've had building code changes that started dramatically after Hurricane Andrew hit in 1992. In Tirzah, like there's still political pressure to not have building code changes. Like there's still builders and contractors who say, well, if we go to category 5 mitigative status, homes are going to be too expensive to build, people won't buy them. How does ACI economically create a narrative around short-term, long-term things? Like, yes, the cost is a little bit more, and it is a little bit more. We're not talking like you get Cat 5 roofs and windows and we're doubling the cost of the home, but it's probably a double-digit increase to the cost with the benefit of long-term, reduction in losses, which should translate in reduction in premiums long term. How do you guys fundamentally have you done white papers on that, and how do you guys frame that out?
We've done a lot of white papers on insurance, and on that issue. We haven't done a lot of white papers on mitigation, but some of the frameworks that I think are really helpful when we're talking about mitigation is allowing marketplace signals to work. Like you said, if you do some of these risk resilience, building and for your home or property or whatever it is you have, then that should be able to be reflected in your rate. And part of that is allowing insurance companies to price compete on certain things. If you do XYZ, we'll lower the premium because your risk is reduced. And so allowing the marketplace to really create those incentives. And then the other thing that we think is really important, and I've mentioned it earlier about informed consumer choice. The cost of building a more resilient home is more expensive. The cost of insuring a more resilient home, if the marketplace is able to work properly, will be less expensive. And so allowing that information to really flow freely between the contractors and the consumers and the insurance companies and the
Mm.
lawmakers is really key to empowering consumers to make their best choice. There is a chance that a consumer will be like, I don't want to pay this much money up front to build this house. I'll just pay the longer premium or the higher premium over the long term. That may not be the decision I would make, but if that's the calculation they want to make, I think making the price signals or making the price signals communicate or accurately communicate the risk is really
Yeah.
key to that conversation.
There, I mean, you're speaking my language, and this is a difficult topic for, I think, the typical consumer to understand. There's a lack of trust in the marketplace. But in essence, if you want to live on the coast in Florida, you should expect to pay more. Your risk is higher. And like you said, if you want to build your home less expensively, let's say you don't even want to use wood, like you just want to use drywall and shoddy material to make it as inexpensive as possible, you need to understand that there are ramifications for that long term, and that the price signals are telling you that. It's information that I
Hmm.
think a lot of consumers lack that understanding. What do you does the ACI how do you engage with the consumer? Because my experience has been that a lot of consumers distrust the marketplace. They don't they don't understand necessarily the that prices are information. They just see prices as something that's painful, or something I have to budget for, but not information. How does the ACI engage with consumers at scale to try to explain complex elements? Like you were doing the graph. At some point, you have to do the graph or tell some story around the graph or the math to basically say the price is more than like this thing that comes out of your wallet. It's information that goes into a feedback loop, and it's valuable. It's telling you something. How do you do that?
There's a lot of levels on which you can do that. You can do the really in-depthness, or you can kind of do the main takeaways levels. And so when we're looking at public policy, one of our big principles of what we communicate isn't necessarily what people want to happen or what people think should happen. It's
Hmm.
if you do X, this is what will happen. And that takes a lot of sometimes the intention behind certain rules or regulations out of the conversation and just focuses on reality, because at the end of the day, reality trumps ideology every single time. You can want to lower prices, and if you don't understand the market. But I think we really acknowledge that there is a certain level of trust and information asymmetry that exists in the marketplace. Whether it's not really fully understanding your insurance premium and kind of trusting that it's going to do what you think it is. That happens in the medical field, especially. There's a huge level of trust that you put with your care providers. And it also kind of trickles down to less dramatic things where you trust your barista to make your latte with sugar-free vanilla as opposed to full sugar vanilla, though. Depending on your health conditions, that might actually be a major trust worth.
Yeah.
But I think it's really important to also acknowledge that we have a really robust system in place for consumer protection already. We have protections against fraud, we have protections against unfair and deceptive practices, and we have certain liability within our system to protect against gross negligence. So when we're talking at ACI and we're talking about really communicating these things to the consumer, it's less about how do we start protecting the consumer and more about how do we really reform our current protections in place to empower the consumer to make the best choices. And maybe there are situations and areas that we need to tweak, whether that's improved disclosures. I know the financial industry has huge disclosure requirements to make sure that consumers really understand what they're getting into. Um, and it can also be as simple as expanding existing technologies into or existing protections into new technologies. We can see this a lot with AI. I mean, AI means everything and nothing all at once in the conversation right now. But we see that a lot of these harms people are concerned about are covered in existing law. So, a lot of the times when we're looking at consumer protection or communicating things to them effectively, is really about incorporating these things into the existing frameworks that do work and tweaking where it needs to be tweaked.
Yeah. The outsiders who view, the Insurance Advocacy Forum of Florida, which is the essence of this particular podcast, um, almost view us as pro-industry. And I
Mhm.
tell them, no, we are pro-marketplace. We're not pro-industry. We're not pro-consumer. If you do right by the industry, if you do right by the marketplace, everyone else will benefit from that, sort of thing. But it does, I think folks from the outside get a sense that we are pro-industry, and much of it comes from our our sense of trying to set the realization that there are plenty of consumer protections. I think there's a whole movement out there that it's like every little thing has to benefit the consumer, and it almost feels like, well, the insurance company shouldn't make any money, right? And I feel like there's a huge struggle. There's a tug of war out there, and that even with the ACI, I'm going to venture to say that there are other um, organizations out there that would probably label much of what it is that you're doing pro-industry. How can you label yourself as a consumer group when prices are still going up and that can't possibly benefit the consumer? So I feel like a simpatico mission here on the reality trumps whatever is going to happen, and if you go too far, you're going to see what happens in the marketplace. But how do we overcome this knee-jerk reaction? We're seeing it in Florida. I'm sure we're going to see it in other states as well, that when the marketplace fails, I'll call it failure. When we do have these kind of like climate shocks and the legislation or regulation is not allowing the supply chain to bring a solution to the table. Now I feel like there's this knee-jerk reaction. It's like, okay, well, we'll just let the government do it. We'll just ask the government to come in and just kind of fund more wind coverage, fund more wildfire coverage, fund more flood coverage in these areas. What's the ACI stance, or what is it that you guys are doing to encourage more market participation and not necessarily more government participation? Because I think we have a long history of seeing when the government comes in because the market's not performing well, that also doesn't work very well either for the consumer.
So it's an interesting question, and I'll kind of give an answer in two parts. There's a couple different ways of thinking about this. One, when we're looking at government actions, I think it's really important to first consider what is causing the problems in the first place.
Hmm.
There are market failures that are examples. I'm sure people can rush to come up with them themselves.
Yep.
However, often when we kind of peek behind the curtain, it's government intervention, which is distorting marketplaces and creating a lot of these failures. So we can look at the pricing of insurance markets. Are they arbitrarily low? And are they low because the government has put pressure on the industry? Is the risk really reflected? Because a well-functioning insurance marketplace that has an adequately priced risk is able to handle some of these shocks for over the long term if they don't, like if there's unprecedented just back to back to back to back hurricanes, then we might be talking about something else. And so really what we focus on at ACI, and something that I think is a myth that should really kind of be busted, is the idea that trade-offs are not inevitable. It is almost impossible to design a public policy or a
Mm.
rulemaking without having secondary or tertiary consequences or unintended consequences. And so at ACI, what we really try to do is use the best economic tools available and really have an honest conversation about what those trade-offs are. And from there, consumers can hopefully make their best informed decision. And then another part of this idea that I think is really prevalent when we see a lot of the conversations about government solutions is that there's this idea that the consumers, either can't make their own decisions, or business is so big and bad and just out to get the consumer that it really needs a government intervention in the marketplace. And sometimes businesses act nefariously and they do need intervention. However, more often than not, the relationship between consumers and businesses is mutually beneficial. And so I think twisting the framework of this idea that we have to step in, we have to rein in business, consumers are the victim, is really important to better facilitating some of those mutually beneficial relationships in the marketplace. Because the
Yeah.
marketplace does a great job. I mean, we can look through the history of like consumerism. It does a really good and shockingly good job at meeting consumer needs. And so I think as often as we can, letting the businesses serve their own consumers, which they have a economic and financial incentive to do, is the best way forward.
I mean I feel like we're speaking the same language. A recent business example, which I think highlights exactly what you were just describing, is in the airline industry, where JetBlue and Spirit, yellow and blue, were set to merge, and the government came in and said, "Nope, that's antitrust. We can't allow that to happen because you will gain some unusual power in the marketplace that is anti-consumer." But what ended up happening was the economics were not working well for airlines. That's why they wanted to merge, and Spirit just declared bankruptcy. And it's exactly what you described with like the interest rates. It's like, hey, we want to do this thing to protect the consumer, and ultimately they harm the consumer because now we're going to pull some supply out of the marketplace, which economic models are going to tell you prices are going to go up, right? There's going to be pressure for prices to go up because you're pulling supply away, and that's a really powerful kind of framework to work on. Um, I want to try to end this like on a positive note. You said the marketplace generally does work,
Yeah.
right? And can you provide an example of where it might be where I think most of society would see it and say, yes, you can see there's a mutual beneficial relationship there because I would like to strive for the insurance industry in particular to go towards it where it's so obvious that it's a mutually beneficial relationship. Is there an example that kind of rings out in the marketplace, whatever sector, where it's just like you can kind of see it working and it's like the consumer's benefiting, the company's benefiting, society's benefiting. It's almost like a win-win-win.
Yes, so I will give you two answers. One is the more academic, and then the other is the more fun one. And I think it'll be easy for you to figure out which one's which.
Okay.
But we just talked about airlines, which I think is really important, um, because we do look at the cost of flights as absolutely plummeting. And yes, the whole idea of the golden age, where you basically had to chase lounge as your seat in the airline, isn't really the thing anymore. But we really see that these airline industries have really focused on serving the average consumer. And the average consumer is very price sensitive as opposed to experience sensitive when it comes to airlines. And so we can see that with increased kind of routes and flight offerings, but having an all time, I believe it's all time low when adjusted for inflation, um, with the exception of COVID, because
Yeah,
that was a
makes sense.
that was a
Yeah.
unique instance, but we have really low prices on airlines, and so at the same time that they're coming under a lot of antitrust scrutiny, they're performing really well to meet the needs of their consumers, and they also meet the needs of their less price-sensitive consumers by offering things like business class, extended economy, first class. If you're, Taylor Swift, you have your own private jet. We're seeing a lot of these meetings, Kim Kardashian too. I won't just talk about Taylor Swift. Um, we're seeing a lot of these companies and industries really successfully serving their consumers. And then the most fun example that I absolutely love because it's so clear, at least for some of the audience, we can look at the cosmetic industry. And the cosmetic industry has demonstrated the power of having a single disruptor. So back in 2016, I think it was, you had Fenty, which is run by Rihanna, enter in the foundation game, and they launched, I think, 40 Shades, which was basically unheard of at this time. And the really unique thing is it went from like fair to really, really deep. And so as you can imagine, I had a special interest in getting the really, really fair foundation. So I was like, this is great. This is amazing. Um, but what we've seen is we've really seen other competitors in the market rise to the challenge. Now, if you're releasing foundation shades that are not 20, 30 different colors on a whole range, you get absolutely slammed by the consumer reviews and the industry in general. And so I think I love the beauty and cosmetic space because I think it really does communicate some of these market forces. And the Rihanna Fenty effect, I think, should be wider discussed in policy conversations.
That's brilliant. I want to end it there or ask one final question.
Yeah.
When are we going to get our private jets?
So that's going to take a little bit. We need to have good market signals. We need to lower the costs. Airports probably have to expand their capacity. I'm a nervous flyer, so I'm not going to talk about like licensing because I'm like, let's just a nervous flyer on that front.
Yeah.
But eventually, I'm sure we'll probably get floating, slightly hovering jets first. but we'll see. Get Elon on it. Get the Doge twins on this.
The private drones. We're seeing all those drones in New Jersey, and someday we're gonna get the flying cars. They're just gonna be private drones, I guess. I don't know if they can get us from Washington, D.C. back to Florida smoothly.
Maybe they'll be less, they'll just be like little hover backpacks or something, little jetpacks. I don't know. It's
And
the technology hype cycle. We never know what's actually going to happen, and we all predict, and then we're all wrong, but we're like moving in the right direction for the most part.
yeah, I'm a nervous flyer as well. Jetpacks, I don't know. I don't know if I can buy into that, but
I would just
here's
hover so you're nice and close. If something goes wrong,
I know, but
but I
then
guess
what if
that's
you
pretty much driving. That's honestly just driving with more elemental issues.
I mean, I like the idea of hovering if I can get around the traffic. I would just be afraid of like crashing into like a cellular tower or a house or a
Yeah,
high rise.
which is where liability protections come in. So we've come full circle in this whole conversation.
And the consumer will always be protected. Tirzah, this was an amazing conversation. Thank you so
Thank you.
much. And for the audience, I will put Tirzah's connection, ACI's connection, in the show notes so you don't have to pull off the road in order to write it down. It'll be right there for you. Happy holidays to you.
Awesome. Thank you for having me. It's been great and happy holidays.
Thank you.